So welcome to today's our session about how to raise a venture capital fund. But before going really into the capital raise, I want to share a couple of fundamentals on how the venture capital world is working. So venture capital is derived from really the investments in startups. So joining entrepreneurs on the venture on creating new successful businesses. Now, for a venture capital fund, how does a venture capital fund work? Typically, a venture capital fund has a lifetime of about 10 years. In those 10 years, the venture capital fund is actually using its money to invest those startups, to fuel them, to make them grow. And I'll get to the J curve in a second. But before that, we need to talk about how the venture capital fund actually gets the money they can invest in. Because mistake a lot of people do think, hey, venture capitalists are rich, they have money, they can invest. And sometimes it's true, it's their own money. But those are called angel investors. Real venture capitalists are funds where they are raising professional money, which is professionally managed to professionally invested in startups. So where does the money come from? Well, that money they are using comes, for example, from institutional investors such as pension funds, insurances, family offices, or high net worth individuals. So people or institutions which have a lot of money and are able to invest it, giving it to an investment manager to take investment decisions on their behalf. So now let's say the money is in the fund, and then what happens? Now we are talking about the J curve. So when the money is raised, startups need to be found. Successful businesses which will be successful over the next couple of years. And the goal is to find businesses which will be successful in a short period of time. As I mentioned earlier, a venture capital fund is only running for typically 10 years. So therefore, at the beginning, we go into like a downturn in which the venture capitalist is using the money which he has collected and invest that into those startups. And those startups are then using this money in order to grow their business. But then after that downturn, there comes that upturn, that upswing. Typically that should come after 3 to 5 years when those startups are getting profitable. Because that's the moment when the startups will start being able to return money to the fund. Ultimately, the goal of a venture capitalist is to get startups which will have an exit or an IPO. An exit and an IPO, initial public offering, is in the moment in which really the startup will be able to cash out. Once the startup is cashed out, really the fund collects all the money which he has invested and all the returns which he gets out of those investments, and returns that money to all those investors they had originally. Speaking now again about the capital raise. How many funds are actually successfully being raised? Well, to be honest, it is a tough process. So typically funds which want to raise money are raising only the first year. Roughly 50% are only raising their entire target investments within the first year. The remaining 50% need 2 to 3 years to raise the remaining target capital. Only a small minority of those funds are really first-time funds. So often those funds are actually established funds. So those established funds who are really able to raise the money have a track record, investors that know them, investors believe in them, and that's why they are capable of raising those funds. So only a small percentage, as I said, are those new-timers or first-time funds coming into that market. So now, how do you find the right investment opportunity? I'm always talking about like those startups which will be successful. How do you find them? Well, typically there are two ways for it. One is a deep knowledge and understanding of the market. And that's often given by either being like a specialist in a certain niche, like for example, a venture capitalist is a specialist purely in artificial intelligence and he looks for AI investment opportunities, is everywhere around, for example, Europe, around the globe, but in a certain region, but on a much wider scope. Or another group of investors, they are much more the regional specialist. So saying they are not looking into, for example, AI, they're sector agnostic, but they are looking into all the startups, for example, in the Baltics, like one region in the world. They are the number one venture capitalist there. They have all the local relations. They understand the industry very well there, and they pick really the rock stars which are based in that area. Ultimately, that will lead to a venture capitalist's return, which is still the goal as a venture capitalist. Like, as I said before, the goal of a venture capitalist is to return the money to all their investors. So here, like, you need to see a little bit the venture capitalist as a funny guy who is similar as a farmer. As a farmer, you are feeding your turkey, which you are planning to slaughter at Thanksgiving. Similar process have venture capitalists. They really nurture startups, but they are growing them to ultimately sell the business to make their money. Another guy whom you might know, Guy Kawasaki, and I really recommend his books and his YouTube channel. Have a look at him. He actually refers to venture capitalists as drug dealers. Why? Because they give you what you need at a moment when you need it, which makes you for a short period of time very happy. Sounds familiar? Well, drugs do the same. So therefore, always be careful what venture capitalist you are getting into the bed with. Still, I'm a big fan of venture capital, as you know, because venture capital ultimately helps people to grow their business. It helps to innovate. It helps young visionary people to get the right money to start really their business, which makes the lives of many, many people a better place. If you want to find out more about venture capital, please follow me. I'm happy to share more. Write your comments, let me know what you want to dig deeper into, and I'm sharing more stories on venture capital. Have a nice day, and I hope to see you soon.